Is this stock on a hidden falling trend flashing like massive sell signals, or is it a screaming strong buy that somehow, despite a record-breaking 11-day winning streak, the market still considers undervalued?
Yeah, that is the big question right now.
Welcome to the Deep Dive. Today is Monday, April 20th, 2026, and we are decoding a massive market paradox. We're talking about Nvidia Corp, ticker symbol NVDA.
Right, which is currently trading at $201.68.
Exactly. Now, before we rip into the data, do us a quick favor, like the video, subscribe to our YouTube channel, and you really have to leave your feedback in the comments.
Yeah, we want to know what you think.
We really do, because the data is so polarized. And just a quick reminder, we are debating this for educational purposes only. This is just a natural conversation, not financial advice.
Right. Our mission for today's deep dive is to peel back the layers of NVIDIA's latest financials, look at the technical charts, and see what's actually happening beneath the surface.
Okay, let's unpack this. Because to understand if this stock is a trap or, undervalued, we have to start with the cash machine, the raw numbers.
The sheer velocity of the money flowing through the business.
It's insane. Let's look at fiscal year 2026. Q4 revenue hit a record $68.13 billion. That is up 73% year over year.
Which is just staggering.
And annually, they reached $215.94 billion, up 65%, driven almost entirely by their data center revenue, which was like $193.3 billion.
Yeah, and their net income sits at a massive $103.80 billion with a GAAP EPS of 4.90.
Yeah.
But I think what really matters here is the gross margin.
Oh, definitely. The margins are wild. We're talking 75.2% in Q4.
Right, and 71.3% annually. That is supposed to be structurally impossible for a hardware company.
How do they even pull that off?
Well, it's not just the physical chips, right? It's their CEDA software ecosystem. They've essentially locked developers in over the last 15 years, creating this absolute pricing power.
Which gives them a terrifying amount of free cash flow. I mean, they're operating from a negative net debt position.
Exactly.
They have more cash sitting around than debt, and they returned $41.1 billion to shareholders in FY 2026.
Through buybacks and dividends, yeah.
Right. And they have another $58.5 billion authorized. But, okay, let me push back a little here.
Sure.
Look at the 52-week range. The low was $95.04. The high was $212.19. If a rocket has already traveled from $95 to over $201...
Isn't the fuel tank starting to run dry?
Exactly. Do these backward-looking financials actually justify weighing in near the top of the 52-week range?
Well, to figure that out, we really need to look at who is actually fueling the ship right now. We have to follow the smart money.
Yeah, let's talk about the buyers and sellers, because the insider selling is kind of hard to ignore. In March 2026, we saw insiders, including CEO Jensen Huang and the CFO Colette Kress, selling millions.
What's fascinating here is how misunderstood that insider selling actually is.
Wait, really? How so?
Well, these were executed under 10b5-1 plans, meaning they filed public documents months in advance outlining the exact sales. It's usually about tax liability management, not a lack of confidence.
Okay, sure. But there is a massive institutional paradox happening that we can't ignore.
Right, the trading volume.
Yeah, trading volume is up to 160 million shares daily compared to the 142 million average, which normally points to strong institutional accumulation. But then Goldman Sachs comes out and reports the fastest hedge fund selling of tech stocks in 13 years during that same month, March 2026.
Yeah, creating a massive supply overhang.
Including Nvidia. So hedge funds are dumping it. But then contrast that with Wall Street analyst ratings. We have 44 strong buys, 3 buys, 1 hold, and just 1 strong sell.
With an average price target of $273.57, that's like a 35.6% upside.
Right. So if analysts are screaming buy and volume is up, but hedge funds are dumping shares at a historic rate, who is right? Are retail investors just, buying the bags the hedge funds are dropping?
That is the big question. And to answer it, we have to look beneath the chart. We have to dive into the technical analysis and see where the momentum actually lies.
Okay, let's get into the charts. What is the trend direction telling us?
So the stock is in a really powerful bullish phase right now. The 50-day simple moving average, which is at 192.86, has actually crossed back above the 200-day simple moving average.
Which is sitting at 181.65.
Exactly. So that's a highly bullish reversal from the dreaded death cross we saw back in March.
Wow. Recovering from a death cross is huge. What are the key support and resistance levels you should be watching?
Well, immediate resistance sits right at 207.02, which is the all-time closing high. And then above that, 212.19.
And if it drops?
Strong support is 193.83, and then down 182.38.
But we have to talk about the short-term weakness because the momentum indicators are screaming the stock is on a record-breaking 11-session winning streak.
Right. It's definitely running hot.
Super hot. I mean, the RSI, the Relative Strength Index, is at 69.75.
Which is approaching overbought territory.
Yeah, getting super close to 70. And the MASD sits at 3.14, which some platforms read as a neutral to sell divergence. I like to compare that RSI of 69.75 to a runner at the end of a marathon. The runner's moving fast, but their heart rate is completely maxed out. Doesn't an RSI that high mean short-term volatility and a pullback are almost guaranteed?
It definitely points to technical exhaustion. The engine needs a break. And that actually brings us to the core debate of this whole deep dive.
Here's where it gets really interesting. Is Nvidia a value trap right now or genuinely undervalued?
Let's start with the bear case.
Yeah, the downside risks. First, there's the valuation trap. It's trading at an extreme price-to-sales ratio of 30.5x.
Which is astronomical.
Doesn't a 30.5x multiple require just absolute perfection from the company to justify?
It requires zero mistakes, yes.
And we know they aren't perfect right now. I mean, look at the China exposure.
Right, the export bans.
New guidance excludes data center revenue from China because of those bans. That is a potential $17 billion annual loss. That's just gone.
Yeah, that is a massive fundamental hit.
Plus, technical analysts are warning of a potential bear flag if the stock fails to hold that 185 support. Retail traders often get trapped buying at overbought RSI levels right as the trend reverses.
They see the 11-day winning streak, they get FOMO, and they buy exactly when they shouldn't.
Nope.
But if we connect this to the bigger picture, there's a very strong bull case.
Okay, I'm skeptical, but give me the recovery scenario. How do they outgrow a 30x sales multiple with a $17 billion China loss?
By leaning into their massive confirmed order backlog. They have over $500 billion in confirmed orders for their next-gen Blackwell and Rubin chips.
Wait, really? $500 billion in backlog?
Yes, stretching all the way through the end of 2026. And the demand is shifting from AI training to AI factories and inference.
Oh, right, because training is a one-time thing, but inference is ongoing.
Exactly. Inference expands their addressable market massively. So even with the China losses, their Q1 fiscal year 2027 guidance is an aggressive $78.0 billion.
Wow. Okay, so synthesizing all of this, what is the outlook for the listener, short-term versus long-term?
In the short term, like days and weeks, it's cautiously bullish. If momentum holds, the target is 212.
But because of that high RSI, people should probably watch for a pullback toward the 193 support, right?
Definitely. Well, a pullback is very likely. But medium to long term, robust growth remains highly likely. By 2027, analyst targets range from 268 to 323.
Which would be huge. But there is one major cliffhanger we haven't really touched on, the May 20th earnings event.
Oh yeah, that's the real test.
With a $500 billion backlog colliding with historical hedge fund selling and options traders quietly placing bets for May 20th.
It's all going to come to a head.
It is. If this 11-day winning streak breaks, will the retail traders be the ones left holding the bag? Or is this the last time we ever see Nvidia under $210? What stands out to you?
That's what makes this so fascinating.
It really does. Let us know down in the comments how you're reading the tape. Thanks for joining us on this deep dive, and we'll see you next time.